How do you give money without paying taxes? How do I pass on a legacy to the next generation? These are some of the questions that people are asking, especially this time of year, towards the end of the year, heading into the holiday season. And I thought it was really timely to hit on what estate tax really is, some of the misconceptions around it, and how an annual gifting program is probably the easiest and most efficient way to avoid or reduce any future estate tax you may pay. This might be relevant to somebody listening directly. If you're at that affluence level at this point, a relative, or will be relevant to you someday potentially. You'd be just shocked at how quickly assets can grow and how you could accumulate wealth over your lifetime and how estate tax law can change. And you just never know how someday you might be in the position where you have a pretty big estate tax liability on your hands. So looking at this proactively on an annual basis is, I think, the most efficient and easiest way to do this. So let's get into it. So let's look at the historical data on how estate tax limitations have increased over time and kind of frame it for you why this has become so prevalent today to talk about. Starting back in 2001, the exclusion amount, when I say exclusion amount, this is the amount that you can give away in your lifetime without paying any federal estate tax, was $675,000. That rate associated with that exclusion amount was 55% for the top rate. So anything over $675,000 would likely be taxed at 55%. That amount increased to $1 million the next couple of years, up to $2 million through 2008, $3.5 million in 2009. It was even repealed in 2010. And then 2011 through 2017 was $5 to $5.49 million per person. Okay, this is per spouse for a married couple. Now, what happened in 2017? Well, the Trump Tax Cuts and Jobs Act was enacted. And what did that do? That doubled the estate tax exemption to $11.18 million in 2018. That amount has now increased with inflation to current day in 2024 per spouse. We can give away $13.61 million. 20 years ago, people were worried if you were a millionaire, you might be subject to estate tax. These days, not so much. Now, that doesn't mean it won't change in the future, and we'll talk about that and how to maybe think about and plan for that. But how it stands today, each spouse can give away $13.61 million to the next generation without paying a dime in federal estate tax. Okay, anything over that amount would be then taxed at 40%. Now, I will caveat, we're not going to go into the intricacies of state estate tax right now because it is extremely variable based on where you are, but there is such a thing as state estate tax. So I will put a link to the show notes, maybe to a resource that will show you the estate tax in each state. A bunch of them don't have tax, but some of them do. A $3 million exemption. There's a state out there, I believe, with a $1 million exemption. It just depends on what state you're in. You can probably guess some of the states that have higher tax rates are the ones that are going to have those estate tax laws and lower exemption amounts. The states with no income tax probably aren't going to have estate taxes, right? So I'll put that in the show notes. But so we've kind of come from 2001 to today to a time where people now, for the time being, a lot of normal Americans don't really need to worry about estate taxes. However, I'm going to make the argument that for a lot of reasons, you should still have this in the back of your head. You should know about this, whether this is you, a relative, whether this is you in the future. Avoiding estate tax someday is going to be very much in your family's best interest. I'm now going to talk about the lifetime limit, which I just said is $13.61 million, and then the annual gift tax exclusion, right? So two separate things, two completely different buckets. Think of it this way. The annual gift tax exclusion is $18,000 per person per recipient. That is annually renewable each year. It is use or lose. For example, grandparents with 4 kids, each kid has 2 kids. Each spouse can give their $18,000 per individual recipient, right? So those grandparents could give up to $576,000 in tax-free dollars, right? They can get that out of their estate. It doesn't even eat into their $13.61 million per person, that lifetime, right? So your annual gift tax, that $18,000 per person, that exclusion, doesn't touch your $13.61 million. It's only when you go over that $18,000, that is when you have to file forms with the IRS Form 709, and say, hey, I gave a gift of $100,000 to my son, and a certain percentage of that is going to be allocated out of my $13.61 million per person. It's only when we go over that $18,000 amount. So you might be thinking, oh, I don't have that much money, or, I'm nowhere near that. And you'd be shocked how many people may end up owing estate tax someday. We're in a very pro-estate tax environment right now, especially now with Republicans holding the executive, Congress, Supreme Court majority. Estate taxes, for the time being, seem to be not a big deal. If the pendulum swings back the other way, maybe 5 or 10 years from now, they could return the estate tax exemption down to $5 million, down to $2 million. Who knows, right? So I think it's always good to be aware of this. And I'll share a little example with you to think about as well. If we assume somebody's born in 1990, fall of 1990, they're going to be, 34 years old. Their net worth's about $1.8 million, and they're saving about $150,000 to their net worth every year. So that's between 401ks, IRAs, taxable brokerage, savings account, maybe paying down their mortgage. That's increasing their net worth, okay? We assume that net worth grows at 8% a year. That person will have a $5.6 million estate tax bill, assuming that they die in 2070. I know that's not the average American, but I do have clients that are similar to this. It's not that out of the question for a lot of the higher income, higher net worth 30s and 40 somethings that are starting businesses, selling businesses, growing their net worths pretty quickly, real estate, what different ways that they're growing their net worth. It's not crazy to think that they will have an estate tax problem, especially if these exemption limits do ever go down. Just a useful thought exercise to think about. But back to the annual exemption, $18,000 per person. So I do think, whether this is grandparents giving their money away, whether this is parents in their 60s giving their money away, whether this is even people in their 30s and 40s that have more than they need, and, they've got a niece or nephew. I've got a client that puts money into their niece or nephew's 529. Giving money away when the next generation can actually use it, I will argue from a planning and psychological perspective, is much, much more useful than handing them a check when you pass away at 98 and they're 70 and they're already financially independent. So just another reason I think to think about maybe looking at this $18,000 per year per person that we can give to kids, grandkids, in-laws, nieces, nephews, whatever it may be. Just as your net worth grows, as your assets grow, as you start thinking about, hey, what kind of legacy do I want to leave someday and when do I want to leave that? Maybe doing this along the way in little bits and pieces is a kind of a less risky way to do this instead of hoarding your assets and then potentially being subject to legislation risk where in 2031, the Democrats win all branches, right? The executive branch, Congress, they flip everything, House, Senate, and then all of a sudden estate taxes are down to $3 million, the exemption, and maybe there's a wealth tax. Like I'm just making stuff up. I'm just saying, take advantage of what is available to you right now, which is a very, I would say, pro-wealthy person tax environment where we can give away this money on an annual basis and it just not be counted at all against our lifetime exemption. Just to double tap on misconceptions around gifting. So gifts over $18,000 are not taxable. I've heard this a million times from clients, friends. People think that's the limit. We can't give over 18 grand, otherwise it's taxable. That is not true. That just means you need to report that and it will eat into your 13.61 million lifetime exemption. Okay. We filled up that annual bucket. Now we go to lifetime bucket. Okay. Recipients of gifts and inheritances do not owe taxes on what they receive. Another huge misconception. I've had clients that have inherited money from parents, whatever it may be, and they're worried about what kind of tax. They're thinking they're gonna have to pay half of it in taxes. Like that the gifter, the estate, is responsible for those taxes, right? If you inherit an IRA, that you're not gonna have to. You certainly might have to pay taxes out of that because it's a pre-tax account. Those are income taxes that you're paying, not estate taxes. Okay, so if we do give money away, you might ask, what do we have to do to report it? IRS Form 709 is the form that you're going to file for estate tax or gifting. That's only required if the gifts exceed the annual exclusion of $18,000 in 2024, right? We're going to expect that to go up with inflation every year. Okay, that is basically, you can look at it as a scorecard of that 13.61 million. So when you die, let's say 40 years from now, the IRS can go back and look at those gifts that have happened over time and properly assess tax on you or not. I'd also say for record keeping, obviously you need to keep clear documentation of large gifts. Even if they're under the limits, like if you're going to write a $15,000 check to your kids each year to give money out of your estate because you listen to this podcast and you think that's a good idea, awesome. I would just maybe even keep it in a spreadsheet, keep stubs of the checks. I would generally keep good record keeping so that when the IRS, if they ever did audit you, they're certainly beefing up. They have been beefing up the IRS quite a bit with more agents. If you did get audited someday, you definitely want to be able to back some of this stuff up. I think record keeping is always important. If you don't report a gift that should have been a gift, and then they can tack on penalties and interest, and you don't want to fall risk to a potential audit where you might, or your heirs might, owe a bunch of money in back taxes someday because you just didn't do things the right way. So record keeping, doing things the right way, following the law, always a good idea. So let's talk now about exceptions that don't count towards gift limits. So that $18,000 per year, or the $13.61 million per lifetime, there's a few things that do not count at all towards any of this, okay? The two big ones are going to be educational expenses. So payments made directly to an institution for tuition, right? So if your grandkid child goes to Harvard and you give them 50 grand to their bank account and then they pay the tuition, that's a gift in the IRS's eyes. They don't care that it was for tuition. Now, if we write that check directly to Harvard, that is not a gift. There's no limits on that. We can write that check directly. So super powerful, I think, especially for maybe those grandparents that are looking at paying for grandkids' education. Number two is going to be medical expenses. So big ones here would be like cancer treatments, right? Things of that nature that could be really costly. Payments made directly to a hospital or provider for someone's medical bills are not counted as a gift. Again, so if we Venmo someone or whatever, write them a check for 20 grand because we're trying to help them out with their treatments or something, that's going to be a gift. Like that could pose a problem. We don't want to do that, especially if we're giving larger amounts, like 100 grand, that's going to eat into our lifetime exemption. We'd want to write that check directly to the hospital or the provider. In conclusion, kind of our key takeaways here. Gifting is the easiest and most efficient way to remove money from your taxable estate. Annual gifting. I'll just stress it again and again and again. There's all kinds of complicated trust strategies and this and that. And honestly, it's the easiest way to get money onto your estate. I think it's low risk because you're not giving away, if you've got a large estate, you're not giving away that much per year. You're giving money to the next generations now while they probably need it when they're younger and when they're buying houses, when they're doing things of that nature, not when, you pass away and they're already financially free and kind of figuring out how do they give their wealth to their next generation, right? So giving it while, they can use it, I think is good on both sides. Removes money from your estate for free, right? $18K a year. We talked about that. Doesn't eat into your $13.61 million lifetime exemption per spouse. These are all subject to change with future legislation, future years, presidents, Congresses, right? Asterisk, asterisk. We always want to say that taxes are written in pencil, not pen. They can always change. And then I think with that, you might have an estate tax problem someday without realizing it. Start thinking about this and planning early. If you're a business owner and you're high income and you're in your 30s, 40s, like do the math, do the projections. Like it's not crazy to think you might be worth 20, 30 million someday and might have an estate tax problem. So start to think about this kind of thing. I think it's just good, not only financially to save you maybe on estate tax someday, but also just good planning and thinking about like what kind of legacy we want to leave to the next generation. Obviously values, but how do we want to help them out along the way maybe to use our wealth to put our family in a better spot. So I hope that this was a helpful episode on estate tax. I will put all the resources mentioned in the show notes. Reach out, let me know if you have any questions. I think this is the last podcast for this year, so hope you've really enjoyed listening. Please rate and review if you have not already. Let me know if you have any questions, and we will see you next year. Thanks. Thank you for joining us today. Do you want the exact financial planning framework that I use with clients? Go visit baskinfp.com where you can grab a free download of the ultimate military and veteran financial checklist to give you the bluff on what you need to be doing to manage your finances.